Welcome back to another weekly outlook for ES Futures. Week 4 of March is here, and after a chaotic week of rollovers and options expiry, we're seeing some structure return to the board. Let's break it all down from volume to market structure and get an idea on what's ahead. By the way, guys, stick to the end because if you're not following my other socials, then I might have a little surprise for you. A small recap of previous week. Last week was a little strange price action to say the least. Rollover week and options expiry meant unpredictable flows. ES moved in a 120 point range between 5,650 and 5,770. Monday's breakout above CPI high was quickly faded, but the key takeaway here is that we held the buy level at 5,650 from March 12. ES closed the week at 5,718, about 26 points higher than last week's close. So slow progress, but structure is forming. The monthly volume profile is still one time framing down, with a high at 6,052.75. This week we see value climbing up a little bit, about 53 points higher. The double distribution from earlier this month is now balancing out above 5,700. We keep trading above August POC 5,539 and now closing above September's POC 5,714, which brings some bullish flavor back into the mix. For the 10-day volume profile, the one-time framing down remains in place with the highs at 6,066.75. Volume is now clustering underneath this 5,743, 5,741 zone that we mentioned last week. And Friday closed right at the value area high, which is perfectly balanced. The weekly volume profile shows a clear balanced state. We are holding above the 5,670 POC from last week and fighting for a reclaim of the old value area high at 5,783. This week's value area is tight, only 60 points wide, but still averaging about 50 points higher than last week. The daily candle structure is locked inside a 5-day range, closing last week right above the midpoint. Heading into next week, my eyes are on the extremes. Can bias push through, or will we see another failed breakout? Be aware that ES is often trappy, with fake breakouts leading to wrong decisions, so don't just blindly take trades out of this balance, but wait for acceptance on either one of these value areas as confirmation. There's a potential structure reversal forming on the 4-hour chart. If the double bottom at 5,651 holds as a higher low, we could see a grind upwards to clean this awkward volume mess between 5,720 and 5,795. This structure is not confirmed yet, but the pieces are on the board. So the levels I will be watching going into next week is my weekly line in the sand at 5,722. This is our higher time frame, high volume node ledge. Bulls will want to break out and hold above 5,720. If they do, we could squeeze towards 5,785. The top of our low volume node, driven by hedging flows and more momentum. And if we fail here, that is our trigger to look downside to 5,640, where we have the last contract's settlement price, stacked gamma, decent volume support, and long resting liquidity. We are coming off a choppy, messy rollover week. Now clarity starts to return. Let's see if price wants to build on this momentum or trap eager buyers again. I'll be back tomorrow with a full detailed game plan as always, and now for a little surprise. My Sentinel playbook, the complete and detailed playbook that I use myself every day, is live and free to use if you're using Tradezella. The link is in the description. The daily newsletter, which you will need to chart the Sentinel playbook, yes, I took all the work out of your hands, hits your inbox every day before market open. So hit that like button, subscribe, and I'll catch you in tomorrow's breakdown.